Bitcoin has been crashing and bringing the entire cryptocurrency market with it. Now, many people are trying to speculate when the bottom will be here. Have we seen the bottom now? Well, we don't know. There's really no way to know when we hit the bottom until you're looking backwards on it. However, we're seeing some signs, including one sign today that potentially could be a reversal signal. As a matter of fact, last time this indicator popped up, it did signal a reversal. So let's take a look and see what we have going on. So as you can see from my screen, big news this week. First, we see ProShares, which is a company in the United States that has ETFs, exchange-traded funds, is launching a short Bitcoin ETF this week. So that means that through their fund, through your stock brokerage account, with a click of a button, you can go short on Bitcoin. All right, now this is a little bit different than if you're doing it on a normal exchange that allows you to go short with Bitcoin, where typically when you're going short, you have to borrow the asset to go short against it. So in your normal stock trade account, whether that's Charles Schwab or E-Trade or whatever, you have to post collateral. They're basically lending you money in order for you to go short because you have to buy the asset to go short against it. However, in an ETF like ProShares is launching, you don't buy the asset. You're only betting on the direction of the asset itself. I'm not a big fan of this. I've been very vocal about this for a number of years. I'm not a fan of this because Bitcoin should be moving, all assets should be moving on supply and demand. So if I want to buy Bitcoin, I buy it, it comes off the market, I reduce the supply, and I push the demand up, which should increase the price. What these ETFs do, though, because they're not actually buying the asset or making me buy the asset, they're just allowing me to bet against it. So they're taking money that would otherwise be going into Bitcoin and adjusting the supply demand. And now I can take that same money and just bet on the movement of the price over here without affecting the supply and demand. Now, that's degenerate gambling, if you ask me. It's not investing, it's gambling. However, here we go. We're about to see it. We can see here, 8 months after establishing the first U.S. Bitcoin futures ETF, which goes long, ProShares now plans to launch the first short Bitcoin-linked ETF on Tuesday in the United States. It's designed to give investors a way to profit from declines in the price of cryptocurrency. And we can see down here, it says that as recent times have shown, Bitcoin can drop in value. Yeah, no kidding. It's super volatile. Everybody knows that by now. ProShares CEO Michael Saper said in a news release Monday that a BITI affords investors who believe that the price of Bitcoin will drop with an opportunity to potentially profit or to hedge their cryptocurrency holdings. BITI enables investors to conveniently obtain short exposure to Bitcoin through buying an ETF in a traditional brokerage account. All right, so a couple things in here, the good and the bad. What will happen with Bitcoin? Well, I'm gonna answer that. As a matter of fact, there's an indicator that maybe tells us where Bitcoin's going. But before we get to that, it says right here that it affords investors who believe that the price of Bitcoin will drop with an opportunity to potentially profit. So, as I said before, to short Bitcoin, it's not the easiest thing in the world. Now, I'm probably already going to get my comments filled up on this video where you're saying, oh, not another Bitcoin video. Bitcoin's going to zero. And what I typically reply to those types of comments, if you're about to leave me one, that Bitcoin's going to zero, is I say, great, then short it. If you're so confident it's going to zero, then short it. And so now it gives all those people a very easy way to do that. So if you're confident that Bitcoin's going to zero, or you're confident that Bitcoin's going to 10,000 or 3,000, like all the comments that typically fill up on these videos, great. You have an easy opportunity to potentially short it. Now, the other option, as it says here, an easy way to hedge their cryptocurrency holdings. So that's a little bit better. So for myself, I'm long Bitcoin. I have a lot of Bitcoin, and I don't plan to ever sell it. I've been very vocal about that. I'm prepared to ride it up and down, up and down, up and down as many times as I want. My plan is for my grandkids to own my Bitcoin. So I don't want to sell it. I'm not trying to sell at the peak and buy back in at the bottom. But this could give me a way to hedge the downside without having to sell my Bitcoin. So for example, Hey, 60,000, 40,000 looks like about the top. Maybe I should sell my Bitcoin. No, what I could do is I could just go short with a little bit, maybe 10% of my position or 20% of my position. I could go short, which allows me to hedge my position. So if it continues to go up, I won't get the full gain because I'll lose what I went short. However, if it drops in value, then my short will then help me offset those losses. So I do like that option. It's an easy way to do that. Now, it's important to understand that these aren't just that simple. So they say it's an easy way, but you need to be aware of a couple things. So it says, if you're one of the buyers of those 27 million shares, beware. So the way these work is that these Bitcoin futures trade at a premium to the cash. And so there's a carry trade. So basically, when you buy Bitcoin and sell futures to collect about 2% a month, then the trade is going to cost you about 2% a month to hold it. So every month it's going to rebalance, and you're going to be losing 2%. So over the course of the year, you could lose 10 to 15% just to premiums and fees. So you have to make more than that just to break even. And if you want to make any profit, you're going to have to do much better than that. And so you have to be very careful. You can't just be right directionally. You have to be right over the right period of time and beware of those fees. All right, now let's look at what the trigger is that we potentially see here. So we can see here, this is speculative, of course, but someone made the chart for what I was thinking. It would be so poetic if the obvious happens, if what happens. Last fall, a Bitcoin was rising in part because the SEC was about to approve futures-based ETFs. That was an ETF that allowed us to go long, betting that the price would go up. Now, when they announced it was right here at the peak of Bitcoin's price. So when they announced the new long Bitcoin ETF, it signaled the peak, and Bitcoin has dropped since then. It wasn't, if they had the short back then, people could have made some money on the way down, but they made it to go long. Now here we are back down here at the bottom, and we have a ETF that allows you to go short. So could the market be counter trading these funds? And of course, we don't know the answer. Now, I think in some respects, it could make it more volatile because we'll have more people going short and more people going long. And so we might see more tug of war. Or if we get somewhat of an equal amount of people going long and short, it could actually tame the volatility and we could have less volatility. We don't know exactly. However, what is going on with it? And this is the one question that I want to leave you with. Gary Gensler is the head of the SEC. He's the one that's responsible for approving these ETFs. Now, when Gary Gensler came on board of the SEC, a lot of people were pretty happy, including myself. And the reason why is because Gary Gensler gets Bitcoin. He gets cryptocurrency. As a matter of fact, he was teaching Bitcoin classes at MIT. Now, if he was teaching Bitcoin classes at MIT and said very favorable things about Satoshi Nakamoto, then it would make sense that he wanted people to know about Bitcoin, learn about Bitcoin, and participate in Bitcoin. If that's the case, then why is he not approving a spot, or I should say a physical ETF, where the ETF would actually buy the Bitcoin to back it up? Why is he denying those, but then only approving the ones that are able to go long and short completely naked, meaning without buying the actual asset itself? It leaves people to speculate. Maybe you would think maybe he's allowing these things to happen to hurt Bitcoin and cryptocurrency. If we can get all these speculative traders to come in, naked shorting it, they could drive the price down similar to what happened to gold and keep that price suppressed, maybe. Or maybe he's doing these to force people to buy the physical. Maybe he's doing it to hurt the cryptocurrency space and allow Bitcoin to rise. These are all speculative positions. We don't really know what's in Gary Gensler's head, why he's approving these ETFs and not a physical ETF, but time will tell. But I'd love to hear your viewpoint. Which one is it? Is he doing it to hurt Bitcoin and crypto? Doing it to hurt crypto and allow Bitcoin to rise? Leave me a comment and let me know what you think. And while you're at it, real quick, hit that subscribe button. I'm trying to grow this channel and more people can see these videos. And of course, give me a thumbs up with this video if you like it. If you don't, you can give me a thumbs down, but at least leave me a comment and tell me why. That's what I got for you today. All right, to your success. I'm out. Since you've stayed to the end, I know you like this video, which means you're probably gonna really like this video right here and this video right here.